Have you ever wondered how billionaires and global corporations manage to pay little or even zero taxes while the average person is taxed on every paycheck, every sale, and every dollar they make? You're not imagining it, there's a strategy. The rich use. It's real, it's powerful, and here's the surprising part. It's 100% legal. It's called offshore banking, and it's not what most people think. Forget the Hollywood image of secret numbered accounts and illegal activity. This isn't some underground criminal network. This is a fully legal system, protected by international law, used by elite financial advisors, and set up in broad daylight from Switzerland to the Cayman Islands to Singapore. In fact, some of the biggest companies on earth, like Apple, Amazon, and Google, use offshore banking structures to manage their money, cut their tax bills, and grow their wealth without interference. So how does it work? How can money be moved out of a high-tax country and into a low-tax zone without breaking any rules? How can someone legally protect their wealth from the IRS while still traveling the world, buying property, and running global businesses? That's what we're about to uncover. In this video, I'll break down what offshore banking really is, why it's legal, and what separates it from tax evasion, how the rich use offshore entities to minimize or eliminate taxes, and whether you could benefit from this strategy too. Because here's the truth. Offshore banking isn't just for the ultra-wealthy, it's also being used by digital nomads, international business owners, remote workers, and smart investors, people who understand that the tax system isn't built to reward workers. It's built to reward asset holders and planners. So, if you've ever felt like the system is rigged, like you're paying more than your fair share while others seem to cheat it, this video will show you the truth. Offshore banking isn't a myth, it's a global financial system, and today, you'll finally see how it works. Let's begin. Now that you know offshore banking is a real and legal financial strategy, let's break down exactly what offshore banking is. At its simplest, offshore banking means opening and holding a bank account in a country other than your own. These countries are often called tax havens, places known for low or zero taxes, strong privacy laws, and business-friendly regulations. Examples include the Cayman Islands, Switzerland, Bermuda, Singapore, and Panama. They attract wealth from all over the world because they protect your money from heavy taxation, political instability, or excessive regulation. But offshore banking isn't just about hiding money, it's about legal, financial, planning, and asset protection. Think of it like diversifying your money portfolio. Just like you wouldn't keep all your money in one stock, you wouldn't want all your assets tied to just one country's rules. Offshore accounts can offer higher privacy, protecting you from identity theft or lawsuits. Currency diversification, letting you hold money in multiple currencies, lower fees, or better interest rates than local banks, and, of course, tax advantages when used correctly and legally. Banks in these countries also offer a variety of services, from managing international investments to helping businesses operate globally. However, it's critical to know that offshore banking is not about hiding money illegally. Governments require citizens to report offshore accounts. Failure to do so can result in serious legal consequences. The difference lies in how you use offshore banking. If you use it transparently and follow tax laws, it's completely legal, a powerful tool for international finance. But if you try to hide income or launder money, that's when it becomes illegal. In the next scene, we'll dive into how the rich and corporations use offshore accounts to minimize their taxes, all within the law. Stay tuned. Now that we understand what offshore banking is, let's talk about how the rich and big corporations use it to legally reduce their taxes. The secret lies in the way they move money through offshore entities like foreign companies, trusts, or shell corporations set up in tax havens. Here's how it works. Imagine a multinational company that sells products all over the world. Instead of booking all their profits in their home country, where taxes are high, they shift those profits to a subsidiary company based in a tax haven, a place with little or no corporate tax. Because the subsidiary is registered there, the profits it holds are taxed very lightly, or sometimes not at all. This strategy, called profit shifting, is legal and used by many large companies. Similarly, wealthy individuals create offshore trusts or companies to hold assets like real estate, investments, or intellectual property. By doing so, they can protect their wealth from heavy taxation, avoid double taxation on income earned, international evasion, privacy, and protect assets from lawsuits or political risks. This doesn't mean they're breaking any laws. In fact, many countries encourage foreign investment and offer these incentives to attract capital. However, to stay legal, these accounts and structures must be reported to tax authorities. The problem is, complex rules and loopholes often make it hard for governments to track all offshore wealth. That's why offshore banking remains one of the most powerful tools for the rich to preserve and grow their wealth, while paying minimal taxes. But remember, this strategy requires expert legal and financial advice. It's not something you just set up overnight. In the next scene, We'll explore the fine line between legal tax avoidance and illegal tax evasion, and what you need to know to stay on the right side of the law. Stay tuned. At this point, you might be wondering, is offshore banking really legal, or is it just a fancy way to break the law and hide money from tax authorities? The short answer, offshore banking itself is completely legal, but it depends on how you use it. Let's break it down. There's a big difference between tax avoidance and tax evasion. Tax avoidance is using legal methods to minimize your tax bill. Tax evasion is deliberately hiding income or lying to tax authorities, and that's illegal. When wealthy individuals and corporations use offshore accounts, they're practicing tax avoidance. They're following the law, using legal loopholes, and reporting their assets properly. For example, many countries have agreements to share financial information across borders. So, if you open an offshore account, you're generally required to report it to your country's tax agency. Failing to do so can land you in serious trouble, including hefty fines and even jail time. But when done properly, offshore banking is a powerful tool for financial planning. It helps reduce your tax burden without breaking any laws. It also offers other benefits like protecting your assets from political instability, diversifying currency risk, and maintaining privacy. Big companies like Apple, Google, and Amazon all use offshore structures to optimize their tax bills, and they do so within the law. Still, this practice is controversial. Critics argue that these legal tax avoidance strategies widen the gap between the wealthy and everyone else. Governments are trying to close loopholes and increase transparency, but offshore banking remains a complex and evolving field. In the next scene, we'll discuss whether offshore banking could be the right strategy for you, and what you need to know before diving in. Now that you understand what offshore banking is, how the rich use it, and the legal lines involved, the big question remains: should you use offshore banking? The truth is, offshore banking isn't just for billionaires and multinational corporations. In today's global economy, many entrepreneurs, digital nomads, and investors can legally benefit from holding money or assets offshore. It can offer real advantages, lower taxes, depending on where you live, and do business, privacy and protection against political or economic instability, currency diversification, helping protect your wealth from local inflation or devaluation, access to international financial services not available in your home country. However, offshore banking is not a simple fix or a get-rich-quick scheme. Setting it up correctly requires expert legal and financial advice. You must be fully transparent with your home country's tax authorities and comply with reporting rules. If you try to hide money or avoid reporting your accounts, you risk serious legal consequences, fines, penalties, or worse. So, if you're considering offshore banking, take these steps. Consult a reputable financial advisor or tax professional experienced in international law. Understand the laws of your home country and the offshore jurisdiction. Ensure full compliance with reporting and tax regulations. Use offshore banking as part of a broader, long-term financial plan, not a quick loophole. In short, offshore banking can be a powerful tool to legally reduce taxes and protect your wealth, but only when done correctly and ethically. The system may seem unfair to many, but it's important to know how the rules work so you can make the best decisions for your financial future. If you found this video useful, please like, share, and subscribe for more insider knowledge about money, finance, and wealth strategies. Thanks for watching, and remember, financial education is your best investment.